The trajectory of U.S. trade policy is clearly troubling. Reports that Trump administration is considering a clampdown on Chinese investments in the United States and imposing tariff on a broad range of imports could be a game changer for global growth. On the other hand, comparing the current situation to the trade wars that deepened the Great Depression may be a little overdone, says Tom Orlik from Bloomberg Economics. He now joins us from our studios in Beijing. Tom, thanks so much for joining in. This report of the United States trying to clamp down on Chinese imports, how serious is this, and what do you think are the ramifications?
I think at this point we have to start taking these rumors coming out of DC pretty seriously. Steel tariffs, aluminum tariffs, on their own, these are not significant. These are not going to move the dial for China. China just doesn't export enough metal for those tariffs to have a big impact on GDP or the aggregate trade numbers. What would be much more concerning would be if the Trump administration moved with a broad tariff which affected consumer goods like textiles, like shoes, like home electronics. Our base case is still that that's pretty unlikely given the interconnected nature of global supply chains, given the risks that would present to US households facing sticker shock at Walmart and Target. But with the steel and aluminum moves, with the exit of Gary Cohen, I think we have to start taking the possibility that Trump moves more aggressively on trade pretty seriously.
Does the U.S., Tom, does the U.S. run the risk of shooting itself in the foot by squeezing trade with China?
Yeah, absolutely. I mean, the reason why a trade war is not the base case is because, contrary to Donald Trump's claim that trade wars are good and easy to win, in fact, trade wars are bad and difficult to win. Think about the reality for U.S. companies like Apple, deeply embedded in global supply chains, companies like Walmart and Target, deeply reliant on goods which they purchase from China. Think about U.S. households, many of whom voted for Donald Trump, who benefit from cheap made-in-China goods when they go shopping. Think about the Federal Reserve considering more rate hikes. Clearly, aggressive tariffs would push up U.S. inflation more aggressively and push the Fed into a more rapid tightening cycle. All of these things mean that our base case is still trade skirmish, yes, but trade war, probably not.
If I just flip this argument a bit, Tom, the argument that China is definitely more closed than the others in world trade is, I suppose, is valid. How do you see Beijing reacting to what's going on, the statements from Trump and what the United States is trying to do?
Yeah, I think the tragedy for the U.S. administration is that the relatively limited steps that they're taking now to try and redress the trade balance are enabling the rest of the world to present the U.S. as a protectionist force. The reality, though, is that even with these incremental targeted tariffs from the Trump administration, the U.S. remains significantly more open to trade than China. China is one of the most closed-off major economies. Our view is that actually this reduces the chances of an all-out trade war because it means that there's scope for China to take some incremental steps towards opening to appease the U.S. administration and head off any further moves.
One final question, Tom, and financial markets across the world and across asset classes have been a little nervous about this potential talk of this escalating to a global trade war. Is that a bit overdone? How would you characterize what's going on currently?
Yeah, I think it's overdone. I mean, clearly we can't discount the risks. Trump talks continually about protectionism. Now he's acted on that on steel and aluminum. Gary Cohn has exited, one of the main voices for free trade, for business-friendly policies, leaving the White House. The risks are elevated. At the same time, for all the reasons we've discussed, the cost to US corporations that produce in China, the cost to US households that buy made in China goods, the risk to the Federal Reserve if tariffs start to push inflation higher, we think the base case is still a lot of noise, some targeted policies which are bad news for specific sectors, but nothing which approaches the level of a trade war that would start to hit the economic aggregates.
Tom Orlik, always a pleasure. Many thanks indeed for joining us with your perspective. Tom Orlik from Bloomberg Economics, talking about the implications of a potential trade war.